All right, folks, welcome back. This is the daily log entry for February 18th, 2021. All right, Euro-dollar 5-minute chart for February 18th, 2021. Okay, so we have midnight New York time. You would have the opening price here annotated and extended out in time. I just didn't include it here because there's already a lot of lines in here. I want to draw your attention to those more specifically. Rejection block, low, lower low. So the stops below here, taken, ran away, came back down, does not take this low out. This is where you focus. Rejection block, which is a discount PD array. Last down close candle here is the order block. It trades down into that as well. And this down close candle is your propulsion block. It trades into that. Then we send price higher. This is your hourly buy side imbalance, sell side inefficiency. So take a look at your hourly chart and you'll see that buy side imbalance, sell side inefficiency. Consolidation going into New York Open. Buy side liquidity pool here above relative equal highs. Trades down to the rejection block. Lowest closing price in the swing. New York Open kill zone. Rallies. 10 pips. So it's a 10 pip sweep above the buy side liquidity pool that's here. So we're looking at a 10 pip sweep there. And this is your fair value gap from the previous day. And I've included that in your notes. So you can see this projected in the future. We traded up into it here, and it will likely trade up into this closure here. It'll be interesting to see if we can get above that fair value gap and then find it as support maybe at the premium high or the consequent encroachment, which is midpoint. So we'll look to see if there's any kind of accumulation there to see if dollar index wants to trade lower. Institutional order flow entry drill here at or below the low. Hits it there, starts to rally up. Small little fair value gap in here. Real close to that. Didn't quite get to it for my liking. But still, nonetheless, it's traded off of that pretty handsomely. Pound dollar or cable 5-minute chart for February 18th, 2021. All right, so we have rejection block again. We have a low, lower low. Go back to the lowest down closing price. London Open kill zone. Your opening price would be here also, extended out in time, but you can see there's too many lines there to draw the difference between them. This level here is the mid-figure 138.50. We talked about that yesterday. So we rallied up. Came back down into the order block here and that mid-figure level, mid-figure 138.50. Okay, price rallies away, makes a run here on a nice bullish candle, and immediately goes back down here. I'm gonna zoom in here for you guys so you can see the candle's high, the one up close candle immediately after that. Then we open and trade down immediately, the very next candle after this up close candle goes right back down into here. So normally we see like this. This is what you're used to seeing thus far. Candles high, big candle, next candle low, and we're focusing right there for the fair value gap in the form of a buy side imbalance, sell side inefficiency. When you see this, okay, the market is deferring this rebalance. It's not in a hurry to get back down there. One of the things I like to see is when the market trades down into this up close candle, where we would expect normally to see it create a fair value gap. If it opens and trades down immediately there and starts to rally, that's an instance where you can anticipate quick rush away type scenarios where the market's in a hurry to go somewhere. And you can see it does it 2 times here. It gives you an immediate rebalance to this candle here, there, and it does it as well here. Boom, immediate rebalance, and then sends it. Now notice the difference between the price action after the fair value gap. Yes, it goes higher, but look at the immediate surge that happens after you get the immediate rebalance. It trades down, closes in what would otherwise be a fair value gap, opens, trades down, fills in what would otherwise be a fair value gap there as well, and really quick sudden price action. Okay, so if you recall, there's instances where I've shown you my live entries and executions, and I was recording them and putting the annotations up as the market was about to do what I was expecting to see happen, where you'll see me say, okay, I'm looking for expansion now, or I'm looking for immediate surge in one direction, or it should drop now. Many times when I was doing those annotations, this was the PD array that I was working off of. Now, I never drew any attention to it, but because you're in mentorship, you're learning that signature here. So it helps you read, and helps me read, the price action when it should be a sudden movement in the direction you're looking for. So immediate rebalance is that signature. And you'll learn more about this in commentary, so please don't send me emails. Can you teach you a little bit more about that? Yes, I'm going to teach more about it. I'm talking about everything. Okay, throughout this year, you're going to be getting the final treatment for everything that you've already been introduced to, and plus new things I haven't taught yet. So we have another mid-figure level here again, 139.50 mid-figure. Price draws up, just falls short of it there, and then comes back down into New York Open, optimal trade entry. See that? Hits the order block, rallies, 30 pips sweep above the mid-figure. Remember, I was teaching you that the mid-figure levels can see 10, 20, 30 pips, whereas a full figure level like 1.40, if we trade to that level, it could see as much as 40 pips sweep above. Or if it's reaching down to a big figure, it could sweep below it as much as 40 pips. But generally about 30 pips is a good range when we're sweeping mid-figures and even the large round number big figure levels too. But if we work with the 80 levels, like here's 139.80, and then the 20 level would be 139.20. Those tend to be like 10, 15, 20 pips sweeps if they're being utilized for stop runs. The signatures really are consistent with the mid figure and the big figure when it comes to the rules that I look for. It doesn't mean you can't see a 40, 50 pips sweep on any of these levels. It just means from a characteristic standpoint, those levels usually have these characteristics and personality traits. Notice that the high of the day forms ahead of London close. Now remember what I mentioned yesterday. I talked about how when you see the London close creating the opposite end of the range, it tends to be on the first few days of the week, and that's usually Monday, Tuesday, Wednesday. And then it usually creates it a little bit early as you get closer towards the end of the week, Thursday, Friday. Right out of what I discussed yesterday, it creates the high of the day before London close. I'll teach more about why it does that and instances when you don't look for that to happen and you can wait for London close to give you a better exit or the high of the day. Because it isn't always just Thursday and Friday it failing to make the high of the day in London close. Sometimes there's other instances that would lead to it creating the high of the day inside this window of opportunity. Okay, the market trades back down into the order block. So we have the initial order block here, trades down to it here with optimal trade entry for New York. And then in London close, remember what I was mentioning before about how London close setups aren't always the high of the day when it's been bullish and you can do counter trend shorts. Like I used to teach that as a London close trade on baby pips. That's a small little scalp, but it isn't always a good idea to do that. Many times, if you have a higher time frame premise, where it's maybe in this case bullish, if we're looking for that lower price in dollar, and we thought that the last couple of days was just a retracement, if that is the case, then this could lead to bullishness on British pound, and you could use the London close time period to get in sync with that higher time frame trade. So what am I saying here? In your notes for right now, and you just want to annotate the specifics about London close, this time window or kill zone is good for getting in sync with the higher time frame that may be bullish or bearish. So if we are looking for lower prices dollar, higher prices euro cable, then you could time many instances where the higher time frame trend will resume with a setup that creates a low or an optimal trade entry or stop run like we see here, and then it rallies up. So this could potentially trade up into the 1.40 level, maybe a little bit more than that. And I'm going to counsel you to go back and look at those levels I've mentioned on the monthly and the weekly chart. Okay, so that might be where this pair's reaching for, but we'll see. There's no guarantee about that, and I'm not trying to push it too hard for you to get in here and try to take setups that really shouldn't be taken while you're in mentorship. So that's going to be it for today. I will touch base with you tomorrow evening with our daily log entry, and then I'll talk to you on Sunday with our weekend commentary and review. Until then, be safe.